Hi there, it's Jeff here with a video for A-level economists who are studying financial economics and monetary policy. In this video, we're going to take a look at some of the key factors affecting the availability or the supply of credit in the UK. Well, there are lots of different types of consumer credit that one can access in the developed, advanced economies such as the UK. Let's run through a few of them. Credit cards, where people can spend up to a set credit limit and repay a minimum amount each month, with the interest, of course, charged on unpaid credit card balances. There are millions of credit cards in the UK. Big jump in sort of 29 into 2020 during the pandemic as people switched towards spending on credit cards. That's come down a little bit, but as of the latest data at the end of 2024, there are approximately 54 million credit card accounts in the UK. So millions of people rely on credit cards. Overdrafts. An overdraft is linked to a current account, if you have a current account with a bank, and that allows a user, could be a student, could be me, to withdraw more than their account balance, to go into the red, but with fees and interest applied. Then you have personal loans, including unsecured loans, if you're buying maybe a personal loan to extend the house, typically repaid over 1 to 7 years with a fixed rate of interest. And then you have the sort of consumer credit areas, furniture, appliance and car finance. So retailers, including car dealers, offer instalment plans for big ticket purchases, sometimes with 0% interest deals. Payday loans, subject of controversy, short-term, high interest rate loans, extremely high interest rates, unsecured, meant for emergency expenses. But now, in fact, the UK government's regulated them to within an inch of their life due to previously exploitative interest rates. And obviously mortgages, form of consumer credit, a long-term loan for the purpose of buying a property, secured against the home. So it's a secured loan. If you don't keep up with repayments, you can have the property repossessed. So in a modern economy such as the UK, there are lots of different types of consumer credit. And here's a chart showing the monthly outstanding credit in the UK since, over the last sort of 18, 19 years. You can see the growth of credit card debt. The bulk of consumer credit card actually is other loans, including personal loans, overdrafts, store cards, car finance, etc. So here's the key thing for our topic today. This is on the specification. What factors affect the availability of credit in the UK? Well, the central bank has a key role to play here. So their policies on money creation and liquidity do have an effect on how much credit commercial banks and other lenders can extend. So, for example, quantitative easing. If the Bank of England is using expansionary QE by buying bonds or other assets of banks, that increases the cash balances of the banks, increases their liquidity, and in theory, allows them to lend more to personal and corporate customers. Banks might be subjected to liquidity requirements. That's the need for a commercial bank such as Barclays or HSBC to maintain a certain level of highly liquid assets. And of course, if those liquidity requirements go up, that reduces their ability to extend or create loans. Another factor is risk appetite. So the availability of credit does depend on the willingness of banks as well as their ability to take risks. And that's influenced by wider macroeconomic conditions, things like growth rates, inflation, and also the consequences of past financial crises. Oftentimes, as you come out of a financial crisis, commercial banks are more reluctant to lend because they've become risk averse. So risk averse banks tend to limit credit availability, but when they become less risk averse, that tends to expand the supply. And then that's linked to credit risk and default rates. So if a bank perceives there to be a high risk of default, so for example, business loans during a recession, more businesses go bust, more small businesses call in the receivers. So if banks perceive there to be a high default risk, they might tighten their lending criteria. That means they're less willing to lend out and the supply of credit would fall. And then the other aspect is on the supply side. Oftentimes there is the established banks are now facing much more competition. Fintech companies arriving on the scene. So as the market grows, as international banks come into the UK, in theory, this increases credit supply. This chart shows gross new lending in the UK. It normally follows an upward path. It fell during the financial crisis from 2008 onwards. grew slowly, then picked up again. Obviously, consumer lending fell off the cliff during the pandemic. The economy shrank by 10%. But you can see since then it's picked up again. It's almost back at where we would have expected it to be had there not been a pandemic. So what are the risks from the large increase in the availability of the supply of credit? Well, one is excess demand. So an increase in credit supply lifts consumer and business spending, consumption and investment, which can lead to demand pull inflation and a response from the central bank to raise interest rates. And availability of credit goes up, some of that money will be pumped into assets, housing, stocks and shares. So easy supply of credit can increase the prices of assets, such as property, stocks and shares. And so the risk is that a very, very wide access to credit can lead to speculative bubbles and an amplified risk of future financial crisis. And also the increased risk-taking by banks. So one of the risks is that banks themselves may misprice risk, or they just start lowering their lending standards. Subprime mortgages in the USA during the early part of the new millennium was a good example of that. And that increases the risk of loan default. And this is sometimes called the Minsky hypothesis, that lenders start, partly because of overconfidence, partly because of hubris, perhaps because they think they might get bailed out if they make big mistakes. But if the lenders start increasing their gearing, in other words, the ratio of debt to income, there's a risk of a financial crisis because the financial system as a whole has made too much credit available, often to higher risk customers. There we go. This was my topic video on the availability of credit in the UK. Thanks for joining in.